In terms of capital adequacy, our total capital adequacy stood at 17.7%, which is a combination of Tier 1 and Tier 2 capital. Tier 1 capital stands at 16.6% and Tier 2 capital stands at 1.1%, giving us a total capital adequacy of 17.7%. Cost income ratio for the year stood at 9%, that's exactly 9.0%. Now, non-performing loans on an aggregate, our gross non-performing loan number stood at 1.99%. Now, let me explain this a little bit. Our individual non-performing loan number as of 31st March 2020 stood at 0.95%, which is an increase compared to what we had in December. Now, over 95% of our borrowers pay their money electronically. But in a little over 4% of our borrowers, we have to physically contact the borrower, go and meet them, speak to them, and collect the money. Because of the lockdown that happened in the second half of March, it was not possible to do that. And therefore, there has been an increase in the level of individual non-performing loan. My sense is that once normalcy comes back into the system, the individual non-performing loan number will get back to the levels at which we were used to seeing them. Non-individual non-performing loan number stands at 4.7% compared to 2.91% in December. Now, I must also mention that in the non-individual category, there are two loans which are not technically non-performing loans, but we have downgraded them and we are reflecting them as non-performing loans because we see some stress in these two loans. Had we not shown these as non-performing loans, which we would not be otherwise be required to, then the gross non-performing loan for non-individuals would have been 3.7% and the aggregate non-performing loan number would have been 1.7%. We continue to be more than adequately provided. We have been extremely conservative in our provisioning. We've gone and made provisions wherever we felt the slightest degree of risk was there. During the course of this year, we have charged a profit and loss account with a sum of rupees 5,913 crores towards provision, or ECL as it is called. In the fourth quarter, the level of provisioning we charged to the P&L account was rupees 1,274 crores. On a balance sheet basis, we now carry a provision of 10,988 crores, whereas if we were to create a provision strictly in accordance with the regulatory requirement, then the provision we would need to carry is only 4,188 crores. So we are actually carrying a provision which is 6,800 crore rupees higher than what is required to be carried. Now, the current year's provision or the current quarter's provision also includes a special provision which has been made taking into account the current COVID situation. As you know, we do not retain all the loans that we originate. We also sell down loans. And on the loans that we sell under Ind AS accounting standards, we are required to count the interest income, discount that to its present value, and account for that interest income upfront. So net interest income is calculated by different analysts in different ways. One way to calculate it is without considering the securitization income. The other way to calculate it is with securitization income. Now, if we were to look at only interest, that is without taking into account securitization income, then the net interest income was 3,564 crores for the quarter or 12,904 crores for the full year. This compares to 3,139 crores in the fourth quarter of last year and 11,457 crores for the whole of last year. The growth in net interest income on this basis is 14% for the quarter and 13% for the full year. If, however, we were to consider securitization income, which most analysts seem to be considering, then the net interest income for the quarter would have been 3,780 crores compared to 3,238 crores in the previous year, giving an increase of 17%. For the full year, the net interest income calculated in this manner would have been 13,716 crores compared to 12,301 crores in the previous year, giving an increase of 11%. Net interest margin was slightly higher in the current year. Net interest margin for March was 3.4% compared to 3.3% in the previous year. It was almost the same, 10 basis points higher. Spread for the year was exactly what it was. Spread as of March was exactly the same as it was in December, which is 2.27%. Individual loan spread was 1.92%. Non-individual loan spread was 3.14%. The reported profit before tax for the quarter stands at 2,693 crores compared to 3,691 crores in the previous year's fourth quarter, and for the full year stands at 20,351 crores compared to 13,119 crores in the previous year, giving an increase of 55%. Tax for the quarter stands at 460 crores compared to 829 crores in the previous year, and for the whole year stands at 2,581 crores compared to 3,486 crores in the previous year. After considering the tax, the post-tax profit for the quarter stands at 2,233 crores and for the whole year stands at 17,770 crores. Now, let me also tell you that the reported profit numbers that I mentioned to you are not strictly comparable for the current year versus the previous year for a variety of reasons. I think I would sum it up into 5 main reasons. The first reason is that in the current year, we had a profit of 3,521 crore rupees on sale of Guru shares, which was not there in the previous year. The second reason is that on the amalgamation of Guru into Bandhan, based on Ind AS accounting rules, we had a fair value gain of 9,020 crores. Now, coming specifically to the fourth quarter of the year, there are three, or I would rather say 4 factors which have an impact on the results. The first is that we had an extra provisioning that we made this quarter because of the COVID requirement. Secondly, dividend income for the quarter was only 2 crores compared to as much as 537 crores in the fourth quarter of last year. Profit on sale of investments for the quarter was again only 2 crores compared to 321 crores in the previous year. So both profit on sale of investments and dividend income in the current year's fourth quarter was much lower than what it was in the previous year. And similarly, the provisioning was a lot higher because of COVID. Also, the other thing is, given the external environment, we just kept a huge amount of liquidity in the balance sheet. We have been slowly building up the level of liquidity against a liquidity level of around 6,000 crores that we'd have carried last year. This year in the balance sheet, we were carrying as much as 30,000 crores of liquidity. Now, this excess liquidity that we carry actually gives us a negative carry in the P&L account. So if we were to adjust the profit before tax figure for the fair value of investments, for dividend, for profit on sale of investments, and for provision, but without considering the negative carry on the extra cash we were carrying, then the profit before tax for the quarter would have been 3,535 crores compared to 3,064 crores in the fourth quarter of last year, giving an increase of 15%. And the 12-month adjusted profit would have been 12,540 crores. On a profit after tax basis, for the fourth quarter, after making similar adjustments for dividend, in profit on sale of investments, fair value gain, and as well as the Bandhan transaction profit, the fourth quarter's profit would have been 3,075 crores post-tax compared to 2,235 crores in the previous year's fourth quarter, giving an increase of 38%. Now, this 38% is actual profit adjusted for all the abnormal exceptional items. And for the 12-month period, the adjusted profit would have been 9,959 crores compared to 7,673 crores in the previous year, giving an increase of 30%. On a consolidated basis for the 12-month period, our consolidated profit stands at 12,967 crores of rupees compared to 17,581 crores in the previous year, giving an increase of 31%. So this is a broad summary of the results. We had an absolutely normal, or I would say very strong demand for housing in the first 11 and a half months, but then a slowdown happened in the last 15 days because of the lockdown in the country. So I'd be happy to take any questions later on when I individually talk to each of the channels. Thank you.